control, and I have an assistant, Mr. Sonny. I don't see him here today, and Kitty also helps me at times reporting properties that are out of a line, and we have a lot of those. I sent 16 letters out the end of February. I was going to thank the volunteers because so many people do not get mentioned. We're always in the forefront, but all the people that worked on the newsletter, we had a newsletter folding party, and what day was that, Monday? I don't remember. Anyway, so it was up here and we folded and stamped and had a good time. It took a couple of hours to fold and get all those newsletters ready. So thank you to everyone that helped with that. The other piece of my job that has not been addressed since I've been on the board is long-range planning. And Roxana is going to assist me with getting that started. So check probably the Facebook and the website to see when that will be, but we'll be putting up an announcement. Would like to get that done over the springtime before summer gets started, so please watch out for that, and I would love to have volunteers. I know there's lots of folks out there with good ideas, so we welcome your input. Thank you.
Can you hear me? Okay. So basically last year, there were some folks that came to me because they were concerned about the property owners, about the pool. So I went ahead and did a little research, wrote a letter, and I got a meeting with both these ladies. They started explaining to me everything that was happening and what they were going through. And they had lost a treasurer. Well, I have done accounting for about 40 years. I have worked for a nonprofit for 25 years. I have done auditing, and I have also been audited by the federal government and the state. I have done QuickBooks for many, many years. So I went ahead and I offered to help. And it was, to say the least, a mess when I got in there. So, because I was a volunteer from July till December when I was appointed treasurer, I went ahead and trained staff and started going into your books meticulously, line by line, comparing the bank statements with QuickBooks. So this report that I have here, instead of me just spouting it off a piece of paper, I put it on this board here so you can see it. And I'm going to explain, because you have some serious issues going on that you guys need to know. I'm a very upfront person. I'm going to tell you the truth. You might get upset about it, but you're going to hear the truth. I don't play with money. I don't. I balance to the penny. And if I seem a little harsh right now, it's because I'm angry as to what I have found, because it's jeopardizing your association. So let's get started. We're going to do the treasurer's report, generally accepted accounting practices, the IRS, the state, irregularities that I found, corrective measures that we've taken, and recommendations. So let's start with the report. The beginning balance on your checking account was $15,610.05. Current AMAs, we got $650. Past due AMAs, we got $1,339.96. Late fees, $81.54. Credit card fees, $42. We transferred $7,000 from your reserve account to your operating fund. Total income, $9,113.50. Okay? So then we take this amount and add it here, and we deduct it from here, and we come down to $24,723.55. Thank you very much. Now, expenditures. As far as expenditures, I did it differently. I did it by the checks that come in, and you can do that now. There are two ways to do it. It's just not one way. There's two ways to do it. The checks that came in for that month that had cleared, this is what you have. So you see what your actual expenditures are. So for contractors, it's $11,752.33. Administrative costs, $567.25. Utilities paid, $253.09. Parks and Recs, $442.95. Waste management, $182.79. Credit card for that month was $958.08. Merchants fees, $104.68. Bank service charge, $5, and then it was one return check for $100. Leaving the ending balance is at $10,357.38. Your reserve account, we started off at $93,086.49. We had a withdrawal of $7,000. You earned interest $137.31, and your ending balance is $86,223.80. Your CD account, $50,000 in, still there. It matures at the end of the month. Now, this is something you'll be interested in. We have a total of 1,706 properties, all right? And this amount times 65 equals $110,890. That is at 100% if everybody goes ahead and pays, okay? So far, we have a total of 676 property owners in the subdivision. So far, 587 property owners have paid their AMAs. who are in Tier 1, 24 in Tier 2, and then you have 13 property owners that have paid. One has paid partial. So total collected so far is $5,466 as of February 28th. Okay? 5 went to court, and 5 have liens. So generally accepted, generally accepted accounting practices is a standard used by the IRS in the state. It promotes transparency. It's a type of system and guidelines that make sure that organizations can do business together because they're applying to these guidelines. I have this. You could look at it here, and then I also have this here to give you more detail so you can look at it up yourself. So let's talk a little bit about the major problem that's going on right now. This is what has me upset. I have lived here since 2006. We built our home here, me and my husband. My husband passed away. And I'm not leaving here, so I want to make the community better. This community has potential. It does. Let's unleash it. We want more young families to come in. We want to make sure we have services for senior citizens. It has potential. So let me tell you the story. Back in April 2020, that was the end of that audit year, Burgess, Lohman, and Lay, those are CPAs from Kitty Hawk, they did an audit. They did an audit on your accounts, on your books. Now, I found this in going through all those papers. This is the audit, but there are pages missing from this audit. So I could not get a full view of all the irregularities that were found. I'm going to have to contact them with the full approval of the board to get a full copy of this report. And hopefully by the next meeting, I can go ahead and share it. Okay, so they did the audit. And then they sent a letter, and I need to get a copy of that. And then we paid $5,900 for that audit. So then on July 18th, 2020, Gregory Associates, which was your accounting firm, your CPAs, that have been your CPAs since as far back as 2013, for a very long time, had been doing your taxes, have been doing your regular accounting for you guys, making sure that the taxes were filed, doing any journal entries, reconciliations. Their services were terminated. They were terminated based on the letter that I have here because of the cost. Okay. So then you're without a CPA. And what happens? You don't file taxes for 2 years. And then this year will be your 3rd year. You don't file. So according to the IRS, 3 consecutive years, you lose your 501c, your tax-exempt status. And that would be May 15th. So we started working very quickly. And on the 24th of February, I went ahead and met with the tax lady in Elizabeth City. And she said she could do it. She could do all 3 years. Well, to be honest with you, I hadn't heard anything since that time, and I put in some calls. Because this worries me, that you're running the risk of losing your tax-exempt status. So went ahead and I talked to Wendy. Wendy, haven't heard back, I'm kind of worried. Well, she said, well, what's the problem? Why can't we go back to Gregory & Associates? So I said, let's try. So Friday, she went to Gregory & Associates. She talked to them. And we've gone ahead and hired them for them to do all 3 years of your taxes. And go ahead and get that done. There were also some issues. There were also some issues with the state taxes that, as you can see here, some of these have been resolved. However, there's still one that I have to follow up, and we're also following up to make sure that everything is squared away with the state of North Carolina. You need to know this. You need to know this. Failure to file your 990s can mean penalties, loss of tax exemption, and of course revocations. Now, for them to automatically revoke your 501c3, your tax exempt status, you have to be 3 years consecutive. We're headed that way. So that's why it's very important that we hurry as much as possible to get this done and filed. And we're going to work on minimizing or hopefully getting them to waive penalties. So, when I went into your books, like I told you, I've been doing this for a long time. I went into your books, and you have, first of all, you have no board-approved financial policies. Credit cards in the QuickBooks with open balances, which should have been journal entry or paid off. You have no credit card purchases with QuickBooks for one of your credit cards as far back as 11/2020 to June. No entries of purchases. So how can you do your taxes for those years that are missing if you don't have all the information in QuickBooks about your purchases? So that means your trial balance and your profit and loss are not accurate. Okay? No segregation of duties. You cannot have one person do everything in the office. There has to be segregation of duties for transparency, to prevent fraud. Okay? Failure to make deposits in a timely manner. Bank transactions that did not match QuickBooks. I had to go as far back as November 22 because prior to that, that's in a backup system. I don't even want to open that. So went line by line by line, making sure that every transaction matched your bank statement. That took a lot of time. Improper reconciliation of the check register. Lack of a filing system and storage of your financial documents. You can't just have your financial documents all over the place. You just can't do it. Because if the auditors come, what are you going to do? My dog ate my receipt? It's not going to work. Okay? And you have no strategic plan. No strategic plan. You have to have a plan. So, corrective measures. First thing I did was train your staff, train the volunteers. So, all three of us know how to do QuickBooks, are in there. Okay? We created financial policies, which you see back here. Receipts are mandatory. You don't get any kind of reimbursement of any kind unless you have a receipt. And it has to be for a justifiable expense. We purchased laser checks because we're no longer doing internet checks. And we're not doing the little handwritten checks. Every check goes through QuickBooks and is automatically put into your register. We're also going to go ahead, we have segregation of duties because now Miss Wendy opens the mail or her designee. Miss Larson goes ahead and puts the data into the QuickBooks, and I reconcile everything and I look at everything and make sure that we balance and that there are no discrepancies. So I will be, deposits are made within 2 days. There's no reason to hold any checks. Monthly audits, I do those monthly, and I sit down when nobody's there and start going through everything and making sure everything is right. And if I have any issues or questions, I'm on the phone with somebody. Why this? Why that? We're looking for all the credit card statements to go ahead and enter that data in QuickBooks before we do the taxes for those years. It's a lot. It's a lot of data. We need to revise your chart of accounts. It's not adequate. It's not conducive to what your business is. It's a lot of language. into QuickBooks and into a backup system. Miss Wendy, and they bought a scanner, so everything will be scanned and everything will be back up. So we won't have none of these invoices loose or in a box or anything. And all financial documents will be scanned. And then we're also going to work on a POA handbook for the office. So any volunteers that come in, they will know how to operate, how we operate, and have policies and procedures, so we all operate uniformly. Recommendations: we need to file these taxes as soon as possible. We need to work on a strategic plan. Also, I suggest that the treasurer be bonded. It's for your protection. It's for your protection. Because I'm not going to be here forever, trust me. But whoever comes after me, you don't know. You need to be protected. We also did have a finance committee meeting, which we talked about the budget, talked about these things. So we are doing the best we can to keep you informed. And the reports for the new fiscal year will be better. They will have more information, so you know where your association stands and the financial health of your association. I hope you found this report productive, and I'm ready for questions. Let's bring it. Come on. As you can see, ladies and gentlemen, this got printed off of the IRS website. Okay? The IRS has a website that you can see what the public status of the filings for the nonprofits. In other words, you can look at the tax return for the nonprofit on the IRS website. They also have a spreadsheet on the IRS website that tells you all of the nonprofits that got their status revoked.
Paul has signed off on it. I have copies. Also,
Does it look like they got it?
don't call me a liar.
I'll tell you what. We called, sir. We called. I don't need a letter to go ahead and look on their website and see it's not done. So you want to then sit here and defend something, I don't know whether you did or didn't, but the fact still remains. The fact still remains. It's not done. This association is in jeopardy, and we need to fix it. And let me tell you, I got every paper proof to show what you didn't do, okay? So don't threaten me. Regardless whether you did it or not, the IRS doesn't have it, and we're gonna get in trouble. That's my main thing. So you know what? It's a moot point right now.